If you want to understand how difficult trading can be, watch this video. Welcome back, my name is Franco, this is Trading Futures Live. After the CPI news release, markets were dropping approximately 3%. As of right now, when I'm recording this video, they are plus 2%. An entire 5% swing on the NQ futures, or the Nasdaq futures. I was waiting for opportunities to the short side. The dollar was going up, the yields were going up, so I was thinking the market will continue to drop. But my expectations went simply wrong. I was misreading the market, I didn't understand the behavior on the dollar, and as a consequence, I took two shorts and both were losing trades. The first short, I was conscious that the location was not the best, so I narrowed my risk as much as I could, and I ended up losing $70. Very insignificant. On my second one, I still understood that the location was better than the previous one, but myself, I was misreading the market. I was not performing well reading the market. So I lowered my risk quite significantly as well to $150, and I ended up losing $138 for a total of $200 for the day. I know sometimes can be frustrating that you don't make money on this type of trading days, but the reality is that I did not have clear opportunities. I was misreading the market. Whereas in the past, I would have kept shorting and shorting until I lost one account or two. I was able to just stop and understand that psychologically, I was not adapted to the market. The market were doing one thing and I was thinking another one. Okay? And the power of the market is that it's going to do its thing, regardless of what I think. Let's be clear about something. I did not have a good day. I completely misread the market. I was trading very badly. But the good part is that I kept it very small. Here are my results. Even though I'm not thrilled by having a red day, I'm happy that such a bad day cost me very little money. There are four types of trading days. Big red days, small red days, small green days, and big green days. If you try to eliminate from your trading those big red days, you will be profitable. Don't get fooled by traders on the internet that tells you that you can make money every day. Yes, you can make money every day until that big red day comes up to wipe you out. Look, I've been there, okay? Now, let's get back to the video. All right, so this is my H1. Today is October 13th. My first trade was a tradable reaction. I was accounting for this first drop for a continuation. And I have to confess, I was feeling FOMO here. I thought, all right, this thing is going to continue without me. I just placed the order. I had some difficulties with my power. My house got out of power, and then I had to reboot everything. And I was probably a little bit unstable right there. I was like trying to rush into thing, and then boom, I put this trade. The good part is, like I said before, I understood that I was not reading the market correctly, and I ended up losing $69 in this trade. Not bad, but nevertheless was a terrible trade. Here's the ADQD. Terrible position, terrible position. It was not only creating higher lows, but the bad part here is that I need the ADQD against me when I'm shorting. Right here, it was the retracement, okay? So I was totally in the worst position to short. If I would have shorted here, that would have been a different story. I could have gotten a break-even trade. I was shorting right here after the move down. It was very improbable, my trade, to say the least. Here, after the tick chart was moving down to this area where the market bottomed in the morning, here's the area where the market bottomed, right? This is the loss, minus 3%, we were here. And every time we hit this point, we jumped back up. And this was not exception, but the difference is that the market was around like minus 1.5%. We already recovered 1.5%. And then, and long story short, it continued to go up. My tick chart was not terrible per se. It was creating this high and then lower highs while the market was going up, but I didn't have any area of supply. That's a very important statement, because I'll show you in my next trade how after the drop on the CPI, we have nothing to the left. On the drop, that happened in 1 minute or less. So when that happens, there are no formations there. There is no accumulation. There are not big institutions involved in that move. Big institution might have been involved in the top of the move, right? They probably put a large order. But in the way, there are either a bunch of stops or retailers just keep selling. But most likely are stop losses being triggered on its way down. All right, so here's the dollar. And I'll show you the dollar chart later in this video. I think I completely misread the dollar after the move. But here, I was accounting for the dollar for a continuation to the upside. It was not the case. All right, so that's my first trade. My second one was a little bit better, but still, I was trying to force a trade. I was not in my best state executing. Okay, so I thought that this could be the top of the day. And why I thought that? Because the tick chart was making lower highs, while the market was making higher highs. Okay, so I did have the divergence. That is true. But the other part is I did have the ADQD now positive, right? Evidently was going up, higher lows, and then here a extreme move to the upside. But the most important part is not even that, is that I didn't have an area. I did not have an area, a proven area that was trend changing. Whereas when I take trades from previous zones, I know for a fact that the leg out is there. It already moved to one side, and then I'm taking the retest. In this case, it was a very shallow move. Like, look at this. From 11,000 to 900 was 100 points, but accounting for a move of, I don't know, 600 points today, it was quite insignificant. So I tried the short here. I got run over pretty quickly, probably 1 minute or less, and I got stopped out. Here's when your protective stop work. Okay, you got to be happy that you get stopped out, because if it comes back up and you have no stop, then you will lose a lot more money. And here's the picture that I want to show. Here is the 7 minute after the news, but this move happened in 1 minute. Okay, so in this entire candle, there are no accumulation zones, meaning there are no supply or demand zones. Why? Because it happened so fast that you didn't have time to accumulate, or an institution to accumulate. So what happens here is that you have this entire movement motivated for probably a huge order here, and then a bunch of stop losses being triggered, and then you have here a nice big institutional buyer waiting for the orders to get filled. Okay, and this is what happened. Okay, now here all the shorts, the retail shorting, they were being squeezed to the upside. The dollar we already saw the dollar. Now I want to show you the dollar here. My expectations with the dollar were completely wrong, I think. Why? Because here I do have, this is a 30-minute chart. I know the dollar is sitting at a demand that I have here, but on the move after the CPI, I would have expected the dollar, but I didn't pay attention. I was simply accounting for the dollar for a continuation, because I think that the dollar is being squeezed around the world. There's a lot of dollar shortage for other countries. So I was thinking, all right, so my bias has to be long in the dollar. But after the CPI's news, we came here to this supply, a very straightforward supply. You have the drop, the base and the drop, and then you have this retest, okay? So the dollar came to this supply, right? But I was not paying attention to that. I didn't have it, but it came to the tick. It came here, it started to fall back down. I was thinking, all right, in this consolidation, we might have a continuation to the upside, but we didn't. Okay, so this supply was a very powerful to reverse the entire move of the dollar. In the equity markets, when you have that kind of spike, this is what we call a racetrack, an entire move without accumulation, right? Like, think about a racetrack as if it was a path with no stops, all right? So a free path, right? So that's what we call a racetrack. It comes here, there's nothing to hold on the price, and then boom. Even though I did not have a good day today and I lost 2 trades, my expectancy for the week still positive. I am still 5R up on the week. It was a bad day, but I didn't lose a leg. Okay, I made my best effort to take care of my accounts, take care of my mental account, and the good part here is that I'm starting to recognize when I'm not in my right state of mind to trade. So I bring my risk lower, and I can protect either my account, my bank account, and my mental account. Okay, so with that, I'm gonna wrap up this video. I will appreciate you watching it. If you like what I do, please consider subscribing to the channel. Smash that like button so we can grow the channel, right? Thank you.